We've triggered everyone. If you're watching RADTV, you also know that Shelby Elias from FinanceWithShelby.com, United Wholesale Lending, is here. So where are you on Christmas? Like, is this okay? Are you disturbed? Are you triggered?
Yeah, Christmas has come early because it is officially snowing in Tahoe.
It is.
Oh.
There you go.
So are you okay with the Christmas decorations?
Oh, absolutely.
Are you listening to Christmas music yet?
No.
No?
No.
Are you this guy? Are you barren? Do you wait till the day after Thanksgiving?
I actually am barren, yeah. Right after Thanksgiving, that's when I put up my Christmas tree.
What do you do for Thanksgiving?
We have a huge family dinner. I have a massive family. My mom is one of 7 kids, and they all have a ton of kids.
I
so
love
we have a
that.
humongous family.
Oh my God, who cooks? Do you have it professionally done?
No, like everybody helps. It's awesome. It's a huge potluck, and all my cousins, and there's probably 50 to 75 people there. It's awesome.
Do you remember you loved Pops, my father-in-law, because there was 10 of them, but you loved Uncle Roy.
Yeah, I was going to say, I don't like Pops.
Yes, you do. Everyone loves Pops. But we would do a Thanksgiving at their house, and it was ginormous, and everyone would bring something. Yeah. And Bev, his wife, because you're from the East Coast, and she loved that you had family there, I brought for her cornbread stuffing because she was like, "Oh, I feel like I'm on the East Coast," because I guess the regional thing.
More regional stereotypes.
Yeah. But no, I love that with the big family stuff, and you all potluck it.
It's great to see. Is this the last time we're going to see you before Thanksgiving?
I'm not sure.
I don't remember our schedule or what we do. So do you have anything special? Like, do you have one of those things? Do you have like a weird side dish, or is it turkey, mashed potatoes, dressing?
I mean, honestly, our family's so big, we have weird stuff. It's like pizza. Like people just bring all kinds. I mean, we have everything because everybody brings something. So
it's like a buffet.
It is a massive buffet, so we get everything.
That's awesome.
Amazing.
Is it like a 5-day event? Is it like Wednesday through Sunday? Or?
No, but everybody stays to clean up, so it's a late night.
Oh yeah, very good.
Yeah.
All right,
no one sneaks out. Oh, I gotta go.
First, all right, I gotta hit you with the potential bad news first. You gotta tell me about this. The Federal Reserve yesterday boosted interest rates again by another 0.75 percentage points and suggested more rates are coming, which they're trying to, combat inflation. Homeowners with existing fixed rate mortgages, they feel nothing. But anybody with an ARM, adjusted rate mortgages, I don't know how popular those are anymore.
Yeah.
But anybody that's looking to buy a home.
Yeah.
These are high rates. We have not seen rates like this since 2001.
Yeah.
Are you still telling people to buy homes?
Well, yeah. Actually,
I mean, I know it's your job.
Yeah. and this is the 6th rate hike this year. So it's a massive blow. But I always tell everybody that there is always a good time to buy a house. It's just how you buy the house. And right now the game has changed. So in the past, you would have had to buy a house that's over asking price. It's probably not everything that you want. If you're a first-time home buyer, it's really hard to get your offer accepted. And right now, you're going after the sellers that have to sell, because realistically, the only people that are selling are the ones that have to sell. So anybody that's a move-up buyer, where they would be selling their house and buying another house, they're completely out of the game because nobody's trading in their 2.9 or 3.2 rate to sign up for 7%. Makes 0 sense. So all those guys are out. A lot of the investors are out because they don't see a good return on investment as far as cash flow, the difference between your payment and rent. So really, it's a first-time home buyer game right now, and I would suggest writing multiple offers. Write offers really low. If the seller does not counter you back, that means that you wrote an offer too high. You want to go in low, and then you want them to come back and go, there's no way I'm selling my house for that, but I'll sell it for this. And then okay, I'm in the game. And it's very important that you take into consideration like key factors. You want to know the tone of the voice of the listing agent when they come back to you after you write your offer. If they say, there's no way my seller is going that low, we're not even going to counter you back. Now like, okay, I can't go that low. But if they say, well, the seller really needs to sell, go ahead and write whatever. Okay, now I'm coming in even lower than I thought. So negotiation is the key right now, and that's how you can win. And we'll go over some strategies today to help people win in this market.
Phone number is 888-989-9811. You got questions for Shelby Elias from FinanceWithShelby.com. You can email us, RAD@RADRadio.com. I'm going to jump to the seller side because you do it all. Because Angela wrote in, she says, Shelby, you are truly a blessing with the knowledge that you share. We live in a very rural area where fire is insane. We put our house on the market 6 months ago. No luck. Winter's coming, tons of snow, so we let our listing expire and plan to put it back on the market come spring. We are not in a position where we have to sell. We just want to move out of state. So my help needed is, what would you recommend if the house isn't selling? Should we stick it out and keep trying to sell? And if so, how do we sell this thing? Or should we just put it up for Airbnb and try for a permanent renter?
I like the idea about Airbnb. So you can analyze your Airbnb on what is it called? Why am I?
Oh yeah, you said it last time.
Yeah.
Oh,
I use it every single day. But
don't you hate
anyways,
that?
you can call me and I'll go over that. But there's a site that will actually allow you to analyze the Airbnb investment by pulling up all the other Airbnbs, and it tells you exactly how much that they're making.
Is it Air DNA?
There you go,
That's
Air
right.
DNA.
There's
Yes.
our boy.
Perfect.
Brendan comes through.
Yes, thank you.
Air DNA.
Yeah, so Air DNA would allow you to type in your address. It'll show you every single other property that's on Airbnb and how much money that they made. So that's a great way to analyze that. As far as your listing, you want to take your listing off of the market for 90 days. And then when you relist, it's going to show up as a brand new listing. So then that way, you're going to get the most amount of exposure that way. And then I would also check out every single property that's been listed, look at the ones that have sold in your area. Then that'll tell you what you need to do in order to list your house and actually sell it. So if they did landscaping, if they have new paint, things like that, also be creative in the way that you are listing it. Advertise things like, we're willing to give you a $20,000 credit towards repairs, and if you put $50,000 into this house, then it'll be worth $100,000 more. So offer credits like that and show them the strategy on how to win with your property.
All right, let's jump back to the buyers then. And you are big on this equity builder program right now. Why?
Yeah.
How is it? How does it work? Because this is first-time home buyer stuff,
Yeah,
right?
and it's a grant, so it's going away. So, this isn't like this is going to last forever. So I think that we probably have enough funds to last maybe another 3 months. But
And then you think it's going away.
Yeah, and then it's going to go away because they only allocate so much funds to give away. They're literally giving away money. And for first-time home buyers, if it's your primary residence, you get 10% down for free. You can use that to your down payment, your closing costs. You literally will come out of pocket with zero money. So I think that that's a phenomenal opportunity. And again, in the market that we were in 8 months ago, no seller would accept that. So now you have an opportunity to get literally 10% down for free. You buy a $400,000 house, that's $40,000. They make you be a first-time home buyer. There's an income limit of $81,920. So as long as you make under that amount.
As a couple, as whatever, right?
Yeah, well, it could be as a couple, but also if it's a husband and a wife, I can use just the husband to qualify or just the wife.
So they could make $140,000, but we're only going to use the husband.
Yep.
Got it.
Yeah,
Wow.
and it's a great way to buy. If you're a first-time home buyer and you want to buy this house, and even if you say, well, I want to buy a house that's higher priced, I want to buy a $500,000 house. Well, why don't you think about buying this house? Use the 10% down for free. Keep all the money that you currently have for down payment. Live in this house, and then use the money that you have in the future to buy another house and rent this house out. So, there's a ton of ways to win, but this program's literally free money. I would take advantage of this as soon as possible. Some other things that you can do too is you can keep the funds that you have for your down payment, use the funds here, and then use those to renovate the property. So again, the ways that you win in this market, you want to write low offers so you can get maybe a seller credit, then get the free government money, and then use your own money to fix the house up. So, I mean, if you hit that, you're winning no matter what.
Now, if you use the Equity Builder program as a first-time home buyer to get into a house because it's a challenging time, but people want to buy, people should buy, you always want to own property, can they refinance when the rates go down?
Yes, you can refinance. If you do pay off the mortgage, they're going to require you to pay some of those funds back. It's not like you have to pay out of pocket, but they're going to add that to your loan amount. And it's scheduled based on how long that you've been in the home. So if you've been there for 2 years, they might require you to pay 20% back, or you know what I mean? It depends how long that you've been there.
This is reminding me of something that my husband and I went through, and I'm just really excited, like the way you're describing for people that want to buy right now, and when you eliminated who actually is selling, right? It's people that have to. And what makes me excited about that is because my husband and I had misfortune over 15 years ago, and we were that person. We had to sell the house. Yeah. And we ended up getting to know the people that bought our house. And to this day, it warms my heart so much because they paid, they got a great deal because we needed to get rid of it. Yeah. They got a great deal. And then when it came time for them, after their kids grew and they were leaving the state to go somewhere else, oh my God. The profit they made out of that house, it almost makes me cry. Incredible. Yeah. So it's kind of like, it might sound harsh to some people, but it's like our misfortune was the fortune for someone else. And that happens a lot, and that's just the kind of the way that it works. And it is kind of a beautiful thing. I mean, look at it that way. You're going to do something really beautiful for someone else,
Hello there. Tyler, go ahead.
Hi, how's it going? I had a question about a flip I have listed right now. I was seeing what is some enticing ways that I can show that I'm just a motivated seller, because it's been on the market for 30 days and the interest rates just went up again. So just a little worried about what's going to happen in the next meeting that's going to happen with the feds.
Yeah.
Rates are going to go up again.
Yeah, so there's a program that I would recommend advertising. It's called a 2-1 buy down. And what this does is, say the prevailing interest rate right now is a 7% APR, okay? Then for the first year, I can go all the way down to a 5%. So that gives them a 5% rate for the entire first year. Then it stages up to a 6% for the second year, and then it goes back to a 7% for the remainder of the loan. And this is a fixed rate loan, but it's going to allow you to have a lower payment for the first 2 years. And the idea is in that 2-year period, if rates come down, then they can refinance. So it gives them the relief. And if you're advertising that product and say, hey, I can get somebody down to a 5%, well, now there's going to be a lot more buyers that are enticed, and they're wondering, wait, how can I do that? And you're going to give them a credit in order to use this program.
Oh, we got this email, rad@radradio.com, from Nicole.
Hey, Nicole.
It says, I'm 29. My fiance and I are trying to save for our first house. We both have good jobs with benefits. He has a credit score over 750. I have a credit score over 800.
Nice, good.
Notice how she brags about hers being better. With that, how much do we need to save for a down payment, and how good of an interest rate can we get with our credit scores?
Yeah. So the minimum down payment for a first-time home buyer is 3%. Again, there are government programs that allow you to get down payment assistance, so you can essentially get all of it paid for. And in this market, a seller will accept that, which is phenomenal. But you're probably looking at, there's a lot of different variables that go into qualifying an interest rate, but you're probably looking around 7.25 APR.
Even with their great, those are good credit scores. You get 750, 800, those are good.
Yeah.
But even then,
your rates are in the sevens right now, no doubt. Now, you see other rates being advertised, and really it's just clickbait to get people to call. But what it's doing is they're actually charging you a ton of fees to get that rate down. So if you don't understand how to read those loan estimates that get sent out, then you can end up paying a ton of money in fees and have no idea. So, but that's what they're using to get these rates down. They charge you more fees, the interest rate go down. You want less fees, the interest rate goes up. That's how it works.
Phone number is 888-989-9811. Hi, Russell.
Good morning, guys. Hey, Shelby, just had a quick question for you. I'm on the road right now, but as soon as I get to a stopping point, I'm going to try to get online to your website. What would be the credit requirement for the new home buyer program? Like what would the lowest credit you could see somebody coming in and actually having success with?
So there's different products available. You can use this with a conventional loan or an FHA loan, but you can go down to a 640 credit score.
For the Equity Builder program?
Yeah.
Because we also got this email from Samantha. Says, do you qualify for the Equity Builder program when you are employed as an independent contractor?
Yes, they're going to use your adjusted gross income to qualify.
We got this note from Caitlin.
Hi, Caitlin.
I'm newly married. My husband just listed his house, and I own my own home. His house requires a ton of work that we aren't able to do. We don't have enough time. I was wondering if putting in a spiral staircase and renovating my attic area and making it into a larger room or a loft so my new stepkids have their space rather than everyone be cramped, will that be beneficial? Will it count as another room? Will it increase my home's value, as our plan is to rent out my home once we find a bigger house to accommodate all of us?
Yes, it absolutely will if you get it permitted. If you don't permit it, then it will not be counted as square footage, legal square footage. So you want to make sure that you get it permitted. Also with the spiral staircase, it's not as user-friendly as a regular staircase. So if you can somehow put a regular staircase in, now it feels like way more usable square footage. So I would consider that.
And getting it permitted, because that can sound overwhelming, that's as simple as your contractor should handle that.
I mean, you could handle that. You literally just walk in, tell them what you want to do, and pay the fee.
Hello there. Laura, go ahead.
Hi, good morning.
Good morning.
Hi. So I had a question about first-time buyers for homes. I'm just having like a lot of people giving me their own advice, and there was one person that was telling me there was like a rural house loan that you don't have to put anything down. And my question is, wouldn't there be closing costs to put anything down? And then, or my credit score, wouldn't that have to be like a certain amount also to help me? And I'm just in the situation where I'm trying to fix my credit score. I've had family members use it, so it's like down to a 400. So I fixed it all the way up. I'm like at a 620 right now, which is not very great, but it's better than when I had it before. But right now with like my student loans and all my cars, and we went through our savings because we got into a couple of different car accidents. We're just stuck like in this place, but we want to get out of our apartment because we're paying $1,700, which we might as well be paying a mortgage payment with that amount.
Yeah. So there is a rural housing program that allows you to put no money down. So that is a really good avenue. It's called a USDA loan. So, and you do have to fit into those guidelines in order to make it work. But yeah, give us a call and we can go over that and qualify you. But just keep plugging away. One thing that I do want to mention though is when people say, you know, I'm getting all of this advice, you know, one key just in everything in life that I've come to understand is don't listen to all the noise. It's so funny. The people that are going to offer their advice, they don't even own a home. And they're like, oh, yeah, you know, do this. Or, oh, man, you better watch out here. And you're like, you don't even own a house. What are you talking about? So only take advice from people that are actually better than you. This, I mean, I hate to say it, but this includes your parents. Yeah. You know, if your parents aren't living the life that you want to eventually live, then you can't listen to them for advice because they're not in the place that you're trying to go.
Did she say cars or cards?
Cars is what I heard.
Cars?
Cars, like
auto loan.
Yeah.
Mm-hmm.
Okay. By the way, as you know from being in Texas and meeting a listener when you were there, we have people listening all over the country. They want to know: is the Equity Builder program, is this California specific or is it available elsewhere?
I believe it's available everywhere. You know, I don't know for certain because I'm only licensed in a couple different states. But yeah.
Phone number is 888-989-9811. Hi, Bob.
Hi, how's it going?
Hey,
Hi.
go ahead.
Question was, why are loan companies required to use like the federal interest rate at 7.25 when they can just compete and get somebody a lower interest rate and make money? I mean, no matter what the interest rate is, the loan company's still making money.
Well, there's an interesting question.
Yeah.
Why can't somebody come along and say, who cares what this interest rate is? We're gonna give you 5%.
Because it's the cost that they're also being charged to borrow money, and they're selling those loans on the secondary mortgage market. So it's not like they just make whatever interest that they want. Now, here's some way that you can achieve that. If you go to your buddy and you say, hey, you want to make some money? Lend me $100,000. You know, then it's completely off of that, and they're not selling that as secondary mortgage market. So those are called hard money loans. You can go to some investor that has some money, wants to put it somewhere, get a lower rate. But hard money right now is going for like 15%. So that's the reason why the banks can't just, pick and choose what rates that they want or who they want to lend to for a cheaper amount.
Hello, Jason.
Hi, Rad. Shelby, I have a question. If there is a similar program for first-time builders, I bought my acreage out, right, cash, and done phase one, septic well, electric. and pack for the house and driveway, things of that sort. But I ran out of money, and I'm similar. My 750, my wife's over 800. Is there a program to help us get money to build this house? Basically, so I could use that money to help pay for my mortgage, or at least know that I have a little bit of a nest egg.
Yeah, this is a classic scenario for a construction loan. And since you own the property free and clear, they're going to use the property as collateral. So say your property's worth $100,000 and you want to buy a $200,000 or build a $200,000 house, they'll use that $100,000 in lieu of your down payment. So you don't have to put additional funds down. So yeah, if you apply for a construction loan, they're going to analyze what you're building and what the cost to build that is. And then they're going to use your lot and your purchase price on that towards the down payment.
We got this note from Robert.
Hey, Robert.
Says, my dad is trying to sell his house. He recently made his backyard patio into another room. I haven't asked him yet if he got a permit for it or not. But if he hasn't and still puts the house on the market, can he get hit with some kind of fine? And can he still get a permit for the extra room even if he already built it?
Yeah, you can still get a permit. They may require you to open up the walls to see what you've done. But if you just did it off of a patio, I don't think that they're going to require that. But you got to go into the planning office to find out. But you definitely want to make sure that you do get it permitted and you show that permit, and that also the real estate agent knows to update the county records to reflect the additional square footage. I see this all the time, and I kind of poach these ones off to buy. When they're mislisted, it's a very easy way for me to rehab that and flip it. But as a seller, you want to make sure that all of those items are done so you're getting the most amount of square footage. You can sell it for the highest price.
Every time you're on, we get a bunch of emails, and then when I'm out, I meet people. I think there's a lot of people like Robert who are in that age range where they're thinking about their parents.
Mm-hmm.
And you've talked before, we haven't done it for a few months, but you are a proponent of reverse mortgages, and people still think they're this giant scam. You got Tom Selleck going on the air saying, I wouldn't do this if I thought it was a scam.
I mean, it's Tom Selleck.
I mean, it's Tom Selleck, right?
I mean, Tom Selleck and Shelby, there you
Blue
go.
Bloods, throw Henry Winkler in there, and we've got the
We're
trifecta.
good.
Yeah.
Can you explain quickly why
phenomenal.
it's not a terrible idea?
Yeah, it's not a terrible idea at all. It's actually a government-backed loan, and one thing that people think is that if you do a reverse mortgage, then you don't own the home anymore. The bank owns the home. That is 100% false. And it's even better because if you outlive the loan, say you live to be 110, then your house will never go upside down in equity. They cap you at 95% of whatever the value is.
Wow.
So when you pass away, your kids get the home and they'll always have at least 5% equity. So I'll give you another example. Say you currently owe $200,000, your house is worth $800,000, and you're above 62 years old. Prime candidate. So you have enough equity to last you for the remainder of your life. So now what you do is you no longer make your monthly payment. And if your monthly payment was $2,000 a month, now you don't make that $2,000 payment, and it comes out of your equity every month.
Wow.
So your balance is going in reverse. If you owe $200,000, the next month you owe $202,000.
Yeah,
and it
that's
continues
amazing.
to go in reverse. So instead of you pay nothing, and your balance goes up. And again, if you pass away and now you owe $280, then your kids get the house. They have two options. One, they can sell it, and then whatever, if it's at $280, then they sell it for $800. They keep all of that, amount. It's not like they don't get that.
That's like
So they can
mortgage
sell it.
money.
Yeah,
Basically in a bank
or they
account.
could refinance and keep it. So they have the choice to do that. And there's just so many misconceptions. But honestly, I think the number one thing is that the kids are just banking on the fact that they're going to get this house.
Jeez.
And they don't want, their parents to eat up all the equity. And I mean, that's a legit concern, but that's what people think. So they're like, I'm going to talk this down. And when their mom brings up, hey, I'm thinking about getting a reverse mortgage, they're like, no way, don't do that. So that's what I hear a lot of is like, well, my kids are telling me not to do it.
Oh.
And again, it's like,
Gosh.
that stinks, but
Yeah.
it's a phenomenal opportunity. You want your parents to live the best life. Those are the last years. And their biggest expense is their mortgage. You can literally eliminate that.
Who's eligible for a reverse mortgage?
Anybody who's over, I think it's 62 and a half or, 63 years old for sure.
And you do them.
Yeah.
FinanceWithShelby.com. All right. Hello there, Bill. Go ahead.
Hey, good morning. A couple of years ago, I had a new air conditioning system installed, and the company financed it through, I believe it's called a Hero loan, Hero, and it was $100 a month added onto my taxes. Lately, I've been paying off a lot of bills, and I'd like to try to pay this off, but I have no idea how to find it if it's on my taxes.
You can go to a title company or email a title company like Fidelity or something like that, and you could ask them to pull a preliminary title report. It will show that lien on there. But again, I would see how much that they're charging you for that, because, it might make more sense to leave it on there. I know it stinks as an expense, but if you have a low interest rate on it, then, it might not be worth paying that off.
We got this note from Christine. Says, we are looking at moving to Texas soon. My husband wants to sell to an iBuyer. Is there anything to be cautious about using that instead of going the realtor route to sell?
Yeah, any of those online platforms, you have to realize that what they are going to do is flip your house. And so they're going to give you a lowball offer. It is a very seamless, transaction. It's very easy. You literally go on there. They send you a lowball offer. You accept it. You're done. But in the grand scheme of things, you can sell your house for a lot more money. That being said, there's a lot of people out there that do want to sell their house for a discounted price, so just get out of it. If that's the case, call me first. Don't call them.
Hello there, Patrick. Go ahead.
Hey, good morning, guys. Hey, Shelby, we closed on a house around February, March of earlier this year with the VA home loan, and it was my understanding that if you are a disabled vet, that they waive the VA home loan fee.
Yeah.
I wasn't qualified as a disabled vet at the time we closed, but I just got the qualification just last week, actually. Can we go back and request to have that fee waived now that I'm a disabled vet, since it's been less than a year, or can you do it after the fact? Is there a time frame, or does that work at all?
No, it doesn't work at all. But the good news is that when you do refinance, which you probably will at some point in the future, that VA funding fee would come back again. And so every time you use your VA loan, that you're going to have to pay that funding fee. In your case, the next time that you use your VA loan or you refinance, you won't have to pay the fee.
Hello, Zach. Go ahead.
Hey, Shelby. So I'm building a house. It's a secondary dwelling unit on some property that I own. My mom had a house on it, but it's all in my name. And I did a reverse FHA loan, so there's nothing owed on the house. Is any of this stuff retroactive, or is there any way I could get something towards that or lower my monthly mortgage?
I'm not familiar with the reverse FHA, but if you currently don't have a loan on it, or you do have a loan on it, you can refinance and try to get a lower rate. But I don't think that that's going to work out for you if you already had a loan before, because your interest rate's going to be lower than it is now.
You really need to come next time with a time machine of some sort where people can go back in time and redo things now that they've learned or done things wrong. Hello there, Steve. Good morning.
Good morning.
Hey.
Morning.
So I have a quick question for you. I bought my home in December of last year, and my APR is 10.99. I was wondering if I might be able to still qualify for the new home loan, and also if you could lower the rate.
Yeah, we can definitely lower that rate for you. That's for sure. So, it just depends on where your credit score is right now and if you can qualify for the loan, but I can coach you on how to get all that fixed to lower that rate. So prevailing rates are definitely a lot lower than that. So that's going to save you some money. But you can't, the other half of your question, you can't do the the first time home buyer program if you already own a house.
More
You have to-
retroactive stuff.
Yeah, not own a house for 3 years before you're considered a first time home buyer.
This would be great for other people.
And that is something that you've mentioned over and over again that people don't realize. You can be a first-time home buyer even though you've owned a home in the past.
Yeah, yep. You just got to wait 3 years and then you're back.
Because and there's a lot of people, especially after the 2008 crash, who did short sales, things like that. They've never wanted to get back into the market. They're like, I'm not a first-time home buyer. Well, actually, you are.
Yeah.
If it's been 3 years.
Totally.
We got a different Steve. Go ahead, Steve. Go ahead.
Hey, good morning, everybody. How are you?
Hey, what's
Morning.
up? It's anybody.
Hey, real quick, I could ask you a dozen questions, but there's one pressing. My dad's in his 80s. He built a house, owns it outright in Seattle. He's going to will it to me when he passes. Now, we were told he should put me on the deed. That way we would avoid inheritance taxes in the state of Washington. Are there any downfalls of that, or does that sound like a real positive thing?
It is a positive thing. Here in California, if you add somebody else to title, the only negative is that they reassess your property value.
Ooh.
So if he's owned the house for a really long time, he probably has very low property taxes. So if you add somebody else to title, now they reassess your property taxes, and that could go up, and that could affect, his monthly payment. So that would be the only downside that I see. But the positive side to that is, yes, you'll then be on the property. And if he does pass away, then you can take right over, and there's nothing that needs to be done. You already own the house.
So, asking for a friend. Let's say you have a father who's older and owns a house that, I don't know, is worth $1 million, $2 million, whatever. What about the idea of the house belongs to the trust? And let's just say in this random example, your whoever is the only kid. So like you get the trust. What's the difference between going on deed and becoming the owner of the trust, and the trust owns the home?
There's no difference. Since you own the trust owns the house, you're going to immediately take over.
Cool.
So
I'm good.
there.
I'm
You're
good. All right, good.
And the state gets nothing.
That's the idea, right? That's what we're always going for all the time.
Absolutely. They get enough.
Yeah, of course. Hello there, Daniel. Good morning.
Hey, good morning.
Hey.
I'm on some property now. I rent for my in-laws with my wife, 6 acres, and we're in a real small house. I would be a first-time home buyer. I am a veteran, and what I'm considering doing was, I don't know the difference between a construction loan, first-time home buyer. I'd like to clear some of the property and put a modular home on the property. What would that look like?
I'm not a huge fan of modular homes because they don't appreciate the same, and they also make it harder for you to ever sell the property as a whole. So, I would definitely recommend trying to build a property, another house on there. You can also use SB9 in order to subdivide the lot. So I would go into the county and check that out to say, hey, can I actually apply for a lot division here? At that point, you can build another unit, and then it's actually sellable. So that would be the best route.
Yeah, and if you're wondering what a modular home would look like, I think it has probably doors and stuff, right?
Well, is that a mobile home?
Yeah, right.
Mobile is different than a modular for sure. But or a manufactured, manufactured home is different than a mobile home. Mobile home actually has wheels. Oh. Sometimes you can't see the wheels, but they're there.
Okay.
But
so you can still
that's
move
mobile.
Yeah.
Mobile, right?
Mobile.
But a manufactured home just means that they manufactured it somewhere else. It's like a Lincoln Logs. They put it all together, there.
Okay. I was trying. We've lived in both growing up. I was trying to figure what one was what.
For those of you who grew up in a certain economic class, we learned math inside of these at the back of the school.
Yeah.
What is you've been on enough now to where we know certain things are going to come up. So what do you like to crap on more, modular homes or brand new homes? Because you've taken a shot at both of them.
Yeah. Every time I say anything about brand new homes, I get hate mail. They're like, why? Stop ripping on new homes. I'm like, well, hey, look, I'm speaking the truth. Right now, a brand new home, you don't have the opportunity to make sweat equity. And that is the best way to buy a house right now. Throw as many lures out there as possible. Fish in as many ponds as you can, right? Multiple offers on multiple homes. Test out the sellers. Feel out the waters. Your goal is to buy the property below market value, negotiate a credit that you can use to do basically flip that house. So if the house is 600,000, get a credit for 60,000, which would be great. Take the $60,000, use that to renovate the home. That creates another 60,000 in equity. Now you just walked into $120,000 equity. That's how you win in this market. You cannot do that if you buy a brand new home. There's no opportunity for sweat equity. So what we call this is your equity has been stripped. It's already been stripped by the new home builder. They're selling that house. They built it the best that it possibly can. They're selling it for the max dollar, and none of your neighbors can even remodel their homes. So you're literally just hoping that the market will go up, which it's not going up right now. So you're just sitting there praying, hopefully it goes up. But other places, you can not only negotiate a better deal with a personal seller, but you also have the ability to where if your neighbor fixes his house up, your house goes up.
And there's no landscaping. Oh.
You know, either one of them. I mean, I guess you can negotiate a better deal on a modular home. That's for sure.
Perhaps the most important question of the day, AJ is writing in. But first we have to ask you, what kind of shoes you wearing today?
Hugo Boss.
Okay, because we do a thing on RADTV during commercial breaks once a day. Queenie and I host the shoe cam where we show off our shoes. It's actually more than just shoes, but it's also wardrobes because Queenie's so into fashion and all that. Because AJ wrote in and said, I saw Shelby wearing Nike Air Force Ones on Instagram, and I was wondering if those were the Louis Vuitton Air Force Ones, which can be priced up to 5 figures. Did he get them from Louis Vuitton?
Nice.
Oh, man, I don't know how I should answer this. I don't want somebody breaking in my house to steal my shoes.
It's okay to be proud of being successful.
Yes, they were. I wore them. It was a special occasion. We're sitting courtside, busted out the Louis Vuitton Air Force Ones.
Good for
Pretty hard shoes to get.
That is how people should feel. They should feel good. Bye-bye. The shoe cam's coming up here in mere moments. Shelby Elias from financewithshelby.com. You can follow him on Instagram, Shelby Elias, Elias, posting videos, helpful stuff, free knowledge all the time that you're getting out there. Anything else you want to mention before we let you go?
No, I mean, just Instagram is the best platform for knowledge. So I constantly am putting out new content, showing people how to win in this market, showing people how to buy a house, how to sell a house. Every single thing that you need is going to be on my Instagram. Please share the posts that I post up. The more we share it, the more we can help people together. It's just my name, Shelby Elias.
You'll also get to see the shoes that you plan to burgle from him as you slip into your black and white stripes and grab your bag with a $ sign on it.
So, financewithshelby.com.